Last week was the Memorial Day holiday in the US, and as usual, the housing market does a minor pause. There's a bigger pause coming during the 4th of July holiday week, but a little one for Memorial Day. So inventory grew at a slower rate, and prices are at their summer plateau. But the big trend right now is price reductions. We're watching how many homes across the country need to cut their price, their asking price, before they get offers they need to sell. When we talk about price reductions, it's remember that these are not homeowners that are losing money. They're not underwater, but these are sellers who are trying to maximize their profit when they sell, and they probably just overshot a little bit. Price reductions is an indicator of demand, and it's a leading indicator of the transactions that will happen out in the future. A house that is listed now and doesn't get any offers reduces its asking price. Then in July, they get their offer. Then the sale closes in August or September, and then that sale data gets reported in October, November. Anyway, we can see what's happening right now. Each week at Altos Research, we track every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be the time to step up. They kind of need to know what's happening right now. Go to altosresearch.com, book a free consult with our team, because everybody is worried about what's happening in the real estate market right now. I'm Mike Simonsen. I'm the CEO of Altos Research. And here's what we're looking at for the data for the week of June 6th, 2022. So let's start with price reductions. The percentage of homes on the market that have had asking price reductions is up to 24.1% this week. That's the highest level of the year. As always with price reductions, it's important to keep this in perspective. Normally, across the country, about a third of the homes on the market take a price cut before they sell. But right now, we're only at 24%. So fewer price cuts because we've had such a hot market. But you can see the dark red line here is climbing quickly as we, have lots more price reductions than last year, and more, in fact, now than this time in 2020 when the pandemic buying frenzy was just kicking in. So each line on this chart is a year. Price reductions always climb in the second quarter, which is happening right now. If you listed your house in April and you didn't get your offer, you cut your price now to move the house before the summer gets too far along. Price reductions peak in the fall before resetting in the holidays. So looking at this trajectory, you can see that by July, maybe, we'll be back to our normal 30% price reductions range. This will be normal, but it will feel really slow to sellers who are not properly prepared by their real estate agent. If you're new to Altos and you're just watching these videos for the first time, I like to point out the dark blue line on this chart. 2018 was the last time we had rising mortgage rates. And you can see as the market slowed, price reductions climbed. So 2018, the dark blue line here, started the year with few price reductions and then ended the year with more price reductions. That's the path we're on right now. Again, this year, though, is moving bigger than 2018. The mortgage cost changes have been bigger as well, driving that. Because this is a leading indicator of transactions that'll happen in the future, we know that those transactions will generally still have strong home price gains because price reductions are still low now. Just those gains are slower than last year than they have been. So there's nothing in the data yet that shows any signs of crash or home price declines. Just a very, very notable shift in demand. By the way, Wednesday next week, June 15th, is our monthly webinar. In that webinar, we'll spend time looking at price reductions across local markets. We'll take the time to look beyond the national trend. So which markets are slowing the most? It's a really interesting time to see which of the high-speed pandemic boom markets are downshifting first. In these hour-long discussions, we look at all the leading indicators. We spend time with the local market. So if you're working with buyers and sellers right now, they need to know what's happening, and you should join us. There's a link in the description below to register for our webinar next Wednesday, June 15th. Available inventory of homes for sale rose 3% this week to $375,000. Inventory is climbing quickly, but not really a scary amount. 3% this week. That's down from 6% last week, 8% the week before. So it's decelerating a little bit. We have more homes on the market now than last year at this time. We're finally getting some opportunity for buyers. We are still so far below the normal levels of inventory that it's hard for me to see this trend as anything but good news for the market, restoring some healthy options for buyers. In the webinar next week, we'll look at the latest inventory forecast to see how the models project the rest of the year to play out. The inventory is growing faster than the models have been predicting, so we're adjusting those up, and we'll see what the latest forecast looks for the rest of the year. Here's our immediate sales tracker. We have the fewest immediate sales this week, anytime since winter. 23,000 homes got listed and went into contract essentially immediately. You can see at the far right end of this chart, the dip for the holiday week we've had. We have fewer new listings and fewer immediate sales this week. As a percentage, though, actually immediate sales ticked up. So I started sharing this chart last week. The percentage of that active new market that went into contract immediately. We had 6 weeks in a row of fewer immediate sales as a percent. This week, because we were fewer new listings overall, the percentage ticked up a little bit. I expect this percentage to resume its decline next week. Fewer bidding wars, more options for buyers. There's still lots selling quickly. Immediate sales has been the defining characteristic of this housing boom. And because there have been buyers looking for a long time, many are still jumping on their opportunity when they get it now. Meanwhile, the price of single-family homes in the U.S. is $449,900 right now. That's up just a smidge from last week, and it really shows how the summer plateau clusters around the big numbers, in this case 450,000. It's a new record high for home prices, but I expect this is it. I don't anticipate we're going to break above this level this year. And in fact, some of the leading indicators we're going to discuss in the webinar next week point to zero home price appreciation in 2023. So it could be 2 years before we break this home price record again. We'll see. The median price of the new listings is down to $425,000 this year. You'll see this summer that the light red line plateaus lower than the dark red line. This is healthy. The light red line, the new listings, has been so strong all year that you can see how it spiked up at the right end of this chart here. It was telling us very early to expect this 10, 12% home price gains that we're now measuring. But those are now leveling off as you'd expect for the summer, and then the market resets in the fall. It is a little weird to be talking about record home prices and price cuts at the same time. It's a very scary time to be in this market. So agents, when you're counseling your sellers, this is one way to communicate with them. Yes, the market is still going strong. Price reductions are fewer than normal, but it is changing quickly. So let's do this right. Let's set the proper price so we don't get behind this curve of price reductions. So if you need to have these conversations or this type of conversation with your clients, go to altosresearch.com and sign up now so that you can have the data in the hands of your potential buyers and sellers today. Next week, Wednesday's the June webinar. Lots of details in there that we can't cover in the weekly updates. Click the link in the description below to join that. Last month, we had well over 1,000 people register. We only have spots for 1,000 attendees, so get yours today. Okay, that's all the data we have time for this week. See you next week.